Everyone, we'll get started in just a minute. You guys see my screen? Just NLC.
Yes.
Give folks maybe another minute since we're expecting more. We'll get started. I know we have a lot to cover, so welcome everybody to the Nonprofit Leadership Center webinar series for 2024. Today we have the new nonprofit compliance laws, what you need to know and do now, with Brooke Dawson and Stephanie Smith. I'm just going to go over some rules of the road for everybody. To minimize background noise and distractions, all lines will be muted for the duration of the webinar. At the end, you're able to unmute if you have any questions, or even throughout, feel free to do that. We are recording this session and it will be available on our website for future viewing. We warmly welcome your questions. Like I said, you can type them in the chat box, and we will have a space for that at the end for Q&A. We're looking forward to a productive, engaging session, and thank you so much for your participation. I'll be in the background supporting, monitoring the chat box. If you have any questions, feel free to private message me, but I'm going to turn it over to Brooke and Stephanie, and they will get started.
Okay, everyone, thank you so much for having us today. Stephanie and I are going to talk about new nonprofit compliance laws, what you need to know and do now. So Stephanie and I are here with Rivero Gordimer and Company. At Rivero Gordimer and Company, we pride ourselves on our service to the nonprofit industries. We are the largest Tampa-based accounting firm, as well as the exclusive member of the nonprofit CPAs in the Tampa Bay region. Our team is involved with about 150 charities and organizations, both locally and nationally. We also were named the Small Business of the Year in 2018 and received the One Tampa Bay Award in 2022, recognizing our service to the Tampa Bay community. So we're very happy to be with you today. Just a little bit about myself. My name is Brooke Dawson. I'll be walking you through the beginning of our program today. I've been with Rivero Gordimer and Company for just under 10 years and spend almost 100% of my time in the nonprofit space. I'll let Stephanie introduce herself quickly.
Hi, my name is Stephanie Smith. I've been with Rivero Gordimer for about 2 years now, but I don't remember a time where I didn't do anything with nonprofits. I've been doing this a lot longer than I care to admit, which has been about 20 years. And I am a proud bull and have graduated from USF with both my master's and my bachelor's. So I'm going to let Brooke go ahead and start, and I will pick up the second half.
Thank you, Stephanie. So just kind of walking through our agenda today. Today's overall emphasis will be on the steps your nonprofit organization needs to take to stay in compliance with various state and federal laws and regulations. So we'll start with highlighting the importance of compliance. Then we'll go through a refresher on the IRS Form 990, the associated tools and any filing deadlines. And then I'll turn it over, and then we'll go through upcoming changes to uniform guidance. I'll then turn it over to Stephanie to highlight the changes in the state of Florida charitable solicitation rules. And then she'll end with a summary on how your board can be involved in these best practices and compliance matters. So the importance of ongoing compliance. So why should I maintain compliance? So ongoing compliance is crucial for nonprofit organizations for several reasons. First and most important is maintaining your tax exempt status. So all nonprofits must adhere to federal and state regulations to maintain your nonprofit tax exempt status. This includes filing annual returns and other necessary documents. Losing the status can lead to significant financial and operational disruptions. Essentially, at this bullet point, your donor does not get a deduction for their donation. They're not going to be making that donation to you. Next up, we have building trust and credibility. So compliance ensures transparency and accountability, which are essential for maintaining the trust of donors, beneficiaries, and the public. Trust is a cornerstone for fundraising and community support. So donors need to know you're a good steward of their money. Next, we have protecting the organization's mission. By adhering to compliance requirements, nonprofits safeguard their mission and ensure they can continue to serve their communities effectively. These compliance attributes often align with best practices in management, finance, and operations. This can lead to more efficient and more effective organizational processes, and also gives your organization a higher potential to grow in the future, accept new grants, and expand. Next is avoiding legal and financial penalties. So noncompliance can result in hefty fines and legal repercussions. Nonprofits are not exempt from paying fines to the IRS if things are late or not filed. It can even result in the dissolution of your organization. So staying compliant helps avoid these risks and ensure the organization can continue its mission without any legal interruptions. Last on this slide, we have maintained funding and future opportunities. So noncompliance can result in the loss of key grants, loss of federal and state funding, and potentially affect the organization's ability to secure future funding or grants. So basically, this slide just summarizes my last couple bullet points. What happens if you don't follow the rules? Hurts the mission, loss of tax exempt status, lots of grant funds, damage reputation. We always say that the most important thing a nonprofit and all of our business clients have is your reputation. So you lose that, it's extremely difficult to recover. So no donors or grantors really is going to end in no money for your organization and no money for your mission. So that's why it makes all of these pieces to the compliance puzzle so extremely important. This next slide just summarizes some of the key areas of compliance. So that would be the organization's governance. So this would be your executives, your board of directors, all the way down to your employees. Stephanie will touch later on how to ensure your board is fully integrated in this compliance matters because they are a very important component to this. Next, we have financial record keeping. This comes into play when you're filing your 990. You need to file with accurate information. You want to provide your donors and grantors accurate information, whether that's on an annual basis or throughout the year, or being able to provide your CPA with accurate information. This is extremely important if you're required to have a review or an audit. Your CPA will be asking for supporting documentation, and you want to make sure that your close process is there, you have accurate information to provide. Next, we have your regulatory reporting requirements, laws and regulations, and grantor compliance requirements. So we'll touch on that next, including the tax filing requirements, single audit requirements, and then other state and local requirements. So let's touch on the Form 990 and tax compliance. So this is kind of the first area that we'll walk through today. There isn't much new here, but the importance of this form really cannot be emphasized enough. So I'm just going to touch on some highlights. So what is the purpose of the Form 990? The Form 990 is the IRS's primary tool for gathering information about tax-exempt organizations. This is also a way for them to educate organizations about tax law requirements and promote general compliance on a federal level. Although an organization has to file a form to maintain its tax-exempt status, an organization can also use this as a tool to communicate with grantors and donors and tell your story. Not only does the IRS rely on this form from a federal level, many states also use the form to monitor compliance. Also, as many of you may know, watchdog agencies such as Charity Navigator and GuideStar use Form 990s. They use all the information directly off the form to rate and recommend nonprofit organizations to donors. So what are the filing requirements? What is required to be filed on an annual basis is dependent on the size of the organization. Small organizations or newer organizations with gross receipts, normally less than $50,000, can file a 990N, or what we call a postcard form. There's very limited information on this form. Next, we have a 990EZ, which is a short form used for organizations with less than $200,000 in contributions and receipts in the current year, and total assets of less than $500,000 at the end of the year. Both of these must be met to file that short form, the 990EZ, which includes a short form balance sheet, an income statement, a board of directors listing, and other required schedules. So it's basically just a smaller version of the full Form 990. And then if neither of these thresholds are met for a 990N or a 990EZ, an organization must file a full Form 990. If you're a private foundation, it's a completely different form called a 990PF. So when, where, and how do you file a Form 990? So all 990s after 2020 must be filed electronically. There is no option to mail them in. The due date for Form 990, Form 990EZ, is the 15th day of the 5th month at the organization accounting period. So that's something we get a lot of questions on. It is not the due date of a normal 1040 that you would file for yourself, which is April 15th. It's actually May 15th for calendar year ends. And then for organizations, we commonly have June 30th year ends. That due date is November 15th. If the due date falls on a Saturday, Sunday, or a holiday, then the due date is going to be your next business day. Late fees will be assessed after the due date by the IRS. So again, I mentioned before that the IRS does not give nonprofit organizations any kind of pass on timely filing. So they do assess late fees. If you fail to file for 3 consecutive years, the IRS will automatically revoke your nonprofit status. They will not reach out to you to see what's going on. They will not follow up to see if you had any issues with filing. They will send you a letter in the mail automatically revoking that status. So nonprofit organizations can apply for an extension using Form 8868. This extension can be for 6 months. And then the only new information on this slide here is in response to the 2 hurricanes, the calendar year 2023 returns have an extended due date of May 1st, 2025. So if your December 31st, 2023 year end 990 has not been filed, you have a little bit of an extension there. However, many donors and grantors are going to start asking for this form. So it's probably best to go ahead and get it done instead of pushing it to that May deadline. So using the 990 to tell your story. So it's important to remember that Form 990 is a public document. It's not listed on your website or provided to a donor, but it's still searchable. So just because you're not directly disclosing that information, it can still be found via the IRS website. It's not only an informational form, it's also a tool for donors and grantors to understand your organization. So it should highlight the mission, significant activities and accomplishments, your total program expenditures and grants, as well as operational effectiveness and financial stability. An organization should use the program service accomplishment section in Schedule O to give donors specific information regarding the impact the organization made in the year, whether it's the number of meals served, family house, highlights on medical research you may be doing. It's extremely important. I know a lot of the time some will see 990s just say see Schedule O on the front. And unfortunately, not all grantors and donors are going to make it to Schedule O. So it's extremely important to make those first couple pages really count. So I mentioned that all 990s are available via the IRS website. So they have an IRS tool called the Tax Exempt Organization Search, or TEOS tool. So if you're in any doubt about your filings, or you're looking at working with another organization, or yourself donating to another organization, you can use this tool to search 990 filings. You can also see recent determination letters there. You can see if a nonprofit has lost its status, they'll put the letter of revocation right there. If your status has been revoked and subsequently reinstated, that information will also be on the website. It's very user-friendly, and it allows you to search by organization name or EIN and filter by the state. The IRS does run behind on putting information here, so do not be alarmed if you don't see your most recent filed 990. But again, very good tool for donors or if you're looking at other organizations. So let's move on from the 990 and talk shortly about uniform guidance and single audit. This is kind of the next step in our compliance outline, and this is related to federal regulations on grant fundings. So before we go through what's changed, it's just important to note that uniform guidance governs federal funds. So if you're receiving funds directly from the government or as a subrecipient, which have a assistance living listing number associated with them, those funds are going to fall under this uniform guidance bucket. So the Uniform Guidance 2024 revision introduces measures for burden reduction, aiming to lessen the administrative complexities for recipients. So that's good news, right? So they're aiming to make this whole process easier on the people and organizations that are receiving these funds. This includes increasing thresholds for various financial management aspects, recognizing recipient costs of doing business, simplifying language. That's great news because some of these things are very difficult to understand. Changing program requirements, eliminating burdensome requirements, and clarifying costs and responsibilities. The key changes here include increasing the threshold for single audit requirements, changing the de minimis indirect cost rate, and clarifying some cost requirements. So agencies are directed to implement the revisions by October 1st, 2024, but they may elect to early adopt. Essentially, the guidance right now is that specific implementation may vary on grants. So hold tight before you make any of these kind of drastic changes and wait for additional guidance on that. But all in all, what we're seeing is they're aiming for simplification and reducing the burden on those that are receiving the grants. So very good news. Here we have a summary of the threshold changes. So the top and what I would consider the most important one is the single audit requirement has gone from $750,000 to $1 million to require a federal single audit. So for recipients of federal funds, the threshold for conducting a single or program specific audit has been raised from $750,000 to $1 million. It's important to note that the state of Florida requirements for financial assistance have not yet followed this. Usually they lag a few years behind. The next one is recognizing recipient costs. This is changing the de minimis indirect cost rate from 10 to 15% for allowable indirect costs without negotiating an alternative rate. So some contracts may have this already in there. They might have a different rate. 10% is what usually is going to be standard here, and that has gone from 10 to 15. It also raises the threshold for applying subawards to the indirect rate from $25,000 to $50,000. This next one just talks about equipment and unused supplies threshold going from $5,000 to $10,000. So that's any unused supplies that a recipient is reselling. And then fixed amount for subawards, the maximum amount, fixed amount subawards that the recipients may provide with prior written approval from the federal agency has been increased from $250,000 to $500,000. So if that funding is being passed to subrecipients, that has increased as well. So changes in fund allocation, the Uniform Guidance 2024 revision emphasizes the importance of evaluation and understanding the effectiveness and impact of grant programs. So recipients are encouraged to allocate a portion of their funding towards evaluation activities to gain insight into program implementation. So really measuring kind of where those grant funds are going, if you're being an effective steward of those grant funds, looking at different strategies, looking at different demographic groups. Are you serving as many people as you could be serving? Really taking a step back and kind of evaluating the grant. Looking at data related activities, so data utilization, this is addressed in the revision, recognizing the significance of data and program management and assessment. You can now allocate funds towards data gathering, analysis, and management activities. So implementing different systems than you had before, building integrated data systems to enhance program administration and improvement. So really focusing on effective use of these grant funds, streamlining the processes. And then lastly, we have here communication or community engagement activities. So engaging the public in participation to these federal funds. So having recipients engage with communities to ensure equitable access to grant opportunities and services. Funds can be utilized for community engagement activities to integrate community perspectives into their program design. So really taking a holistic approach here, asking kind of, am I reaching everyone I could be reaching? Am I being efficient with the way I'm spending my money? And then just additional changes, I think kind of the key words we're looking at here is simplification and accessibility. So the new uniform guidance emphasizes simplification and accessibility in grant announcements. So they want the federal government to be putting out information that you can actually read. So federal agencies are directed to use plain language, streamline announcements, and then provide updated notices of funding, emphasizing clarity, simplicity, and concise communication. So they really want to make sure that if you are applying for these grants, if you are receiving these grants, that the compliance requirements make sense and they're easy to understand and they don't deter people from applying for these grants. Lastly, here, the revision addresses labor standards, highlighting the importance in engaging organized labor and responsible contractors. It outlines some additional details on permissible labor and employment contracts, employment practices, using the use of project labor agreements, hiring preferences, and community benefit agreements, essentially just promoting fair labor practices. So a lot of changes there, but all in all, extremely positive. Again, emphasis on taking the burden off of nonprofit organizations that are receiving the funding and really making these grants a lot more understandable. All right, I'm going to turn it over to Stephanie, and she's going to cover the changes in state of Florida charitable solicitation rules. Stephanie?
Thanks, Brooke. So earlier this year, the state of Florida made some changes to their state of Florida solicitation rules. So first, the solicitation rules live in Chapter 496 in the Florida statutes. They're governed by the Florida Department of Agriculture and Consumer Services. And if you were to print it out, it would be probably about 26 pages. So we're going to just hit some highlights today. We're not going to go through every single rule that's in the statute. Effective July 1st, 2024, there were certain changes that were made that impacted both small and we'll say not small organizations. For all the organizations, what they did was they clarified what a street address was and cleaned up some of the language. So in the old statute, it talked about residence addresses, mailing addresses, home addresses, and now it should just read street address. And it also defined what was constituted a street address and what wasn't. So a street address doesn't include a virtual office, post office box, or mail drop. Next, let's talk about what has changed for small organizations. So under the old rule, a charitable organization or sponsor with less than $50,000 in total revenues, which included contributions, during immediately the preceding fiscal year were considered a small organization. And that required a $10 registration fee. Under the new rules, a charitable organization or sponsor still has less than $50,000, but that only applies to contributions. So you could still have an organization that's collecting program fees and other types of revenue as long as they're under that $50,000 in total revenues and also still meet some other requirements. And then they also removed the $10 fee. So this continues the trend of they're trying to streamline things for nonprofits, because I'm sure that $10 fee did not cover what it took to process one of these applications for the state. Next, let's look at what hasn't changed for small organizations. So you still must have no paid volunteers, officers, or members, so essentially no employees. You must not utilize a professional fundraising consultant, solicitor, or co-venturer, which we'll talk about in a little bit. The first two are pretty self-explanatory, but I went ahead and added some information on the co-venturer, since that was something that I'm not sure everybody is familiar with that terminology. And then if for some reason you exceed the $50,000 in contributions within 30 days of exceeding that limit, you must file the full application with the state. So the filing requirements haven't changed. There is a small organizations or sponsors application you must file if you qualify as a small nonprofit. And then also you still are required to file the annual financial reporting form. The important thing to note here is that there is no extension for that for a small nonprofit. That's due when your application is due. Next, let's look at what we would consider not a small let's first talk about the commercial co-venturer. So what is a commercial co-venturer? They've got a pretty complicated definition in the statutes, but basically it's a for-profit that you might partner with that's going to give you something in exchange for being able to promote your nonprofit. So the one to me that's most prevalent sometimes is you might strike a deal with a restaurant and they're going to give you a percentage of sales for either a day or a month in exchange for being able to promote that by the restaurant. So in the state of Florida, there's not any formal registration requirements for commercial co-venturers. Some states do have a formal registration process, but the statutes do include certain duties that they're required to adhere to. So first, they must have your written consent from the nonprofit to hold such a promotion. Also, if you request a final accounting from them of the event, then they're required to provide that to you within 10 days of the request. They also must maintain any records for a period of 3 years. And then also, if for some reason the department requests that accounting, they must also provide it to the department within 10 days. So let's now look at what changed for larger nonprofits. So for what I'm calling not small organizations is basically everybody that doesn't fall under the small organization rules. So in order to streamline the process, they eliminated the 180-day extension for filing financial statements. But that's good news, because if you have an extended due date with the IRS, that is what is going to drive any extensions now. So you may request an extension and they will match that extended date. But what you will need to provide to them is your application for extension of an exempt organization or your Form 8868. And it's important to understand that this extension is not automatic. There isn't anybody at the state that's watching whether you're a calendar year end or a June 30th year end. It's something that you have to request from the department. And it's pretty easy. I've had a few clients already do this. And when you start getting those notifications that either your application is due or your financial information is due, there is a person on that email, and all you have to do is send them an email with the request to extend your deadline and the copy of that 8868. Because what they're really looking for is they're looking to see in writing when your tax return is final due. And as Brooke already mentioned, the storms have kind of thrown a little bit of a sticky wicket out there. So for our area, we've now gone through 3 IRS tax exemptions that started with Hurricane Debbie and ended with Hurricane Milton. So for a calendar year end, anything that was due it's still going to be due May 1st, 2025. And I certainly wouldn't promote this if you have the information to go ahead and file everything, but you may be able to get an additional extension if for some reason you need it due to the hurricanes. I can't say that they will give it to you, but if you send them the information related to the IRS extension, at least you've done the job of asking, and all they can do is say no. Next, let's look at what hasn't changed for large organizations. So you still have a requirement to file the financial statement. You still have an audit requirement depending on the level of contributions that you receive. If you receive less than 500,000 in annual contributions, a compilation review or audit is optional. If you receive between 500,000 and less than $1 million, then a review or audit is required, and over $1 million, an audit is required. You also may submit your Form 990 or 990 EZ in lieu of these financial statements. But the important thing to understand too is anything that's submitted to the state but within $500,000 or more contributions has to be prepared by a CPA or somebody who does this for a living. So for example, sometimes an executive director or somebody within the organization will go ahead and complete that 990. If for some reason you receive over $500,000 in contributions, they may kick it back if it's not prepared by a CPA or an accountant. Next, let's take a look at what's also changed, what also hasn't changed for all organizations. So you still have those disclosure requirements. All of this should look pretty familiar. They like to use the word conspicuously, that the statement required by the statute be put on solicitation materials. And also it should include the toll-free number and the website for the department. If you haven't looked at your registration statement in a while, you may want to take a look and see if it includes all of these attributes. Next, this is also important information for your website. Any page on your website that talks about a contribution or solicits a contribution, if it includes a mailing address where contributions are to be sent, if it includes a telephone number to call or process the contributions, and also if it provides a way to contribute online. So in other words, where is your donate button? Now, what I like to recommend to clients is that go ahead and talk to the person that manages your website and include this as part as your footer. And then that way you don't have to worry about which page it's showing up on and which page it's not. And then also for anything that you send out that's still a multi-piece solicitation, the statement must be prominently displayed somewhere in the information. Finally, we're going to just talk about real quickly some best board practices as kind of a refresher for everyone, and kind of be able to test and see where you fall and give yourself your own little report card for this. So first, these are just some general practices, and the basics really haven't changed that much. It's not intended to be a complete list of best practices, but it is intended to hit the highlights that we're going to cover a little bit more in depth further on. To hit everything, we probably could do an entire presentation on this. So first, you want to clarify the roles and responsibilities for the board. This ensures that the roles and responsibilities of board members are clearly defined, and you want to document it in something such as a board manual or board packet. You want to provide clear role descriptions that help prevent confusion and ensure accountability among board members. Next, you want to develop and follow your governance policies. These policies should be regularly reviewed and updated to reflect best practices and any changes in legal requirements. Next, you want to recruit and orient board members effectively. This means implementing a structured recruitment process to identify individuals with diverse skills, expertise, and networks that align with the organization's mission and strategic goals. You want to make sure that you provide a comprehensive orientation for new board members, as well as familiarize them with the organization's missions, program, finances, and governance structure if they're not already familiar with it. Next, be sure to establish clear strategic goals and monitoring mechanisms. Sometimes these are going to be unique to every organization, so you want to make sure that you're establishing key performance indicators that are tracking the progress of your goals. Next, regularly evaluate board performance. Make sure you're conducting annual board self-assessments and evaluations to assess how your board is doing. Give them a report card and let them fill out their own report card. Next, make sure you have board committees that make sense for you. Every organization might have a finance committee, governance committee, and development committee, but there might be other committees out there to consider that would best meet your organization's needs. Make sure that you have clear communication with your board members and that you're transparent. The worst thing that can happen with the board is surprises. And also, I would encourage you to encourage your board members to ask questions and raise any concerns that they might have and actively engage them in discussions. Finally, keep them educated. There are always opportunities for lunch and learns, members workshops, and regular board leadership conferences. Conferences are not just for management and staff anymore, and involving them in the process helps keep them engaged. Next, let's take a look at some key policies that you should have in place. There's a code of ethics and conduct policy. This can be included in your board packet or board manual. A conflict of interest policy. Make sure that they're reviewing a conflict of interest policy and signing off every year if there's anything that they should be disclosing to the organization. A whistleblower policy, documentation, destruction, and retention policy, a financial management policy, which might also include your investment policy, a gift acceptance policy. If you haven't looked at yours lately, you may want to. I've seen where organizations are now including the gift of cryptocurrency or expanding on what happens when you have an unusual gift. So for example, if your policy doesn't cover what happens if somebody leaves you a house, then you may want to take a look at it and see if in expanding that policy into certain types that you may want to treat differently or get further advice on. And then finally, a social media policy, keeping in mind that now in this day and age, everybody's out there on every form of social media and that your board members are still representing you as an organization. The ones that I put a red asterisk by are those questions that are specifically asked by the IRS, although they're not required by the IRS. Next, in order to evaluate your board and your organization, I would look for checklists and other tools that help. This is a very small picture of an IRS government's checklist, but it helps the IRS to evaluate public charities, and it also offers a sneak peek as to what the IRS is specifically looking for. There's other board member checklists that are available on the AICPA website, and Blue Avocado is also a great resource. It's a nonprofit-driven website with different articles and templates and tools on it. Next, some helpful hints about board recruitment and engagement. I like to think of there being two types of boards, a governance board and an operational board. Governance boards are generally pretty removed from the day-to-day operations, and they also are there to support the CEO and to provide oversight and provide support for fundraising. Operational boards are more directly involved in the day-to-day and are active volunteers and are more common in smaller nonprofits. The time commitment for serving on an operational board can sometimes be a lot more significant than it is on serving on a governance board. However, board members of both do have similar characteristics. You want to make sure that you're engaging a board member that has commitment to the mission. You want somebody that's passionate about your mission and dedicated to your cause. Fundraising skills are also helpful. Money's important, right? Without funding, you can't meet the objectives of your mission. You want somebody who ideally is willing and able to both personally contribute to the organization, but also be able to speak about your organization to others. You want to make sure they have leadership skills and are a team player. I put these two together because you want individuals who can work both together as a team, but also be able to collaborate with others in an organized and positive manner. And finally, you want a board member that has the time and commitment and resources. You want somebody that's willing to give their time, treasure, and talent by attending meetings, participating in committees, and donating or cultivating donors to donate to your cause. Next, fundraising and resource development. You want to make sure that your board members understand the mission and programs, that they have a deep understanding of the organization and its goals. The understanding helps in communicating effectively with potential donors and supporters. You want to also have them lead by example through their own personal financial contributions. Potential donors are most likely to contribute if they see that you've personally invested in an organization. And finally, let them be your treasure hunter. Let them identify and cultivate donors at networking events, and let them attend events and make personal connections. You want them to leverage their personal and professional networks to identify potential donors. And finally, everybody's favorite topic, board financial oversight. What are their financial responsibilities? They're responsible, they have a fiduciary responsibility to ensure the organization's financial health and sustainability. This includes overseeing financial management, budgeting, fundraising strategies, and ensuring compliance with financial regulations. You also want them to be able to improve financial oversight because it's crucial for the sustainability and integrity of the nonprofit organization. The next few slides, we'll look at some key strategies that will help your board enhance their financial oversight. So how do they fulfill their fiduciary responsibility? You want to make sure that the policies are clear and the procedures, and including an investment policy and gift policy, like we've mentioned. You want to engage them in budget development and monitoring. Make sure that they're reviewing and improving the budget annually, that they're looking at the performance throughout the year, not just at the end of the year when the auditors come and do a presentation. And adjust if necessary. A budget is a budget. Sometimes you might lose a program, sometimes you might gain a program, but it's important to make those necessary adjustments so you don't continue to explain differences that are easy to be fixed from month to month. And also make sure that they're reviewing and improving financial statements on a regular basis. Make sure that they're monitoring your cash flow and financial health that you're reporting to them. Review cash flow projections. Has there been any unexplained expenditures? Is there anything new or old? Is something going to come up that you may need their assistance with? And also make sure that you're educating them about your legal and regulatory requirements. What are the organization's filing requirements? Do they require an audit? If not, should they get an audit? And highlight important information on the 990, as Brooke has already talked about previously. Next, make sure they understand the risks of the organization. Nobody anticipated COVID, and that was a pretty big adjustment for a lot of organizations. Make sure you've got some kind of reserves established for a rainy day if possible, and think about diversifying your revenue sources. Look for unserved populations or ways to develop new programs or expand existing program services. Make sure you educate your board members on financial matters. Encourage them to ask questions of management. Encourage them to ask the auditors questions. Why did office supplies go up? Why did program fees go down? Make sure you're providing clear, plain English information to them too. You don't want to get super technical. If it's important to them to understand why the numbers are the why they are, not necessarily that 2 + 2 = 4. And finally, establish some metrics that are meaningful to your organization. Budget versus actual is pretty basic, and that applies to everybody, as well as revenues minus expenses. So you're either gaining, you either have a gain or you have a loss. But it also forces you to look at programs. Is this program self-sustaining? Is it time to maybe discontinue the program because it's not self-sustaining? And I like for service organizations to use total serve versus total cost. How much is it costing you to serve an individual client? And that can also be a valuable piece of information when you're in the community and fundraising. And finally, first and foremost, always promote transparency and communication. Make sure your board understands what's going on so they can help you. So just as a kind of a quick wrap up, some of the best practices of an effective board are these key takeaways. Review policies annually and revise as needed. Conduct regular board assessments. How are you doing as a board? Are there things that you can do better? Training and development, making sure you have a well-rounded board and that they're educated and can articulate the mission and needs of the organization. Making sure you're keeping up to date on the organization's mission and operations. Things do change. And also strengthening relationships with donors and stakeholders and using your board members to do so. So that concludes our presentation for the day. I wanted to thank the Leadership Center for having us host this today. And does anybody have any questions?
Is there a way that we can get a copy of the slides?
Isabella's nodding yes.
Yes, we will be sending the slide deck in the next few days, so stay tuned.
Can I ask you if my email address is on your distribution list?
I recognize your name, so I think we do. Let me see. Are you with AMI Kids?
No, the Skills Center. My email address is WLOPEZ@theskillscenter.org.
We'll make sure you get that.
Okay, and I'll put it in the chat as well. So thank you very much. I appreciate it.
Thank you. And yes, the recording will be actually posted on our website, if I'm not mistaken. And yeah, they will be shared, so you can find that there. All right, do we have any other questions for Stephanie or Brooke?
I did have a clarifying question. For the extension of the IRS Form 8868, the extension that was pushed back to May 1st, 2025, that's only for those that have a calendar year end, correct?
That's correct. That's the only guidance that they provided is for calendar year end right now.
Okay, thank you.
Any other questions? Well, we have Stephanie and Brooke here. All right, so a big thank you to Stephanie and Brooke and the Rivero Gordimer and Company for sharing this incredibly informative presentation. And thank you to everyone that joined us today. Like we said, we'll be sharing this recording and slide deck handout in the next few days. So we appreciate your patience. Feel free to reach out to us if you have any other questions. And keep your eyes out for upcoming webinar. We do have another webinar November 12th, which is about donor engagement. So if you're interested in that, it's also a Tuesday at 2 p.m. It's another free webinar, so highly suggest you join that as well. But I think that's all. So have a great afternoon, everyone.
Thank you.
Thank you.
Thank you. You too.